How's it going, everybody? This is Tim with King's Options. I'm going to go over quite a few things that we normally go over, but had an interesting conversation yesterday. I was talking with my sister, and she has a son, and I guess he's expressed some interest in day trading. So he says, "Hey, why don't you talk to your Uncle Tim? He might know what's going on." And it really put in my head, how do you teach this to other people? And what did it take for me to actually start feeling like I knew any sense of what I'm doing, keeping in mind that I still don't. Nothing we do is definitive. And honestly, that's one of the biggest things that I think people need to realize when they get into trading, is that there are no definitives. There is no A plus B equals C. It doesn't work that way. At best, we play a probabilities game, which means it's only a chance of something being more likely. Something is to go one way than it is the other, but it can still do either. And while those chances are not equal, it is sample size that has that edge play out over the long run. And honestly, that's what the edge is, right? The edge is finding a system, or finding a way of doing things, or finding your process that works for you, that you've put together, that over the course of a large enough sample size ends up producing a result which indicates a consistency in the probability of one thing being higher than the other, and you being able to work with that. So it's really a difficult thing, because especially when it comes to, you get close, you say, hey, it's getting close to family here. It is family. And it's almost like the difference between playing a simulator account and playing live money. It's one thing when you're teaching people that you have no connection to, that you want everybody to do good, you want them to do well, but ultimately there's not the emotional connection, that it is a level of responsibility that you feel that is the same as when it's somebody that close to you. It is just a whole different ball game, even though it's the same game, even though you want the results to be the same, and even though you care about those results being exactly the same, and you want a positive outcome every time. I'm certainly not saying that those you're not related to or not emotionally invested in aren't worth your time. Not at all. Not at all. Being able to help other people do things is fantastic. But you have to realize that it is that difference. I mean, when you're playing with Monopoly money in a sim account, you're testing your edge, you're practicing your system, you're practicing your process, you're looking for all the details that make it so that it builds confidence in the edge that you're trying to establish. So it's very, very important that you do it well. But it is still a different ball game when you put real money into the mix. It just is. And for those of you who've been trading, you know that. You absolutely know that. So that's just a little something that I'm contending with. And to some extent, it's like I almost want to not scare them out of it, but put the fear into them that this is definitely something that you have to take on with a seriousness. Doesn't mean it can't be fun, can't be, you can't have a good time with other people you trade with, be jovial, but when it comes to actually trading itself, you have to be serious about what you're doing. You have to, it's not a joke. You can't just throw numbers out there and throw size out there and hope things are going to work in your way. Hope's not a trading plan in that respect. It's just not. So that's something that's worth thinking about, and I may touch on that in future videos as to how it is I want to approach that, and in so doing leave what I hope are useful bits of my experience that anybody might be able to make and take advantage of and add to their own mental toolbox to be able to help them through the bad times as well as the good times. Euphoria is just as dangerous, if not more so, than fear. Definitely one of the things that I've learned over playing this game. I didn't blow accounts out of fear. I blew accounts out of being too cocky, too arrogant, too confident, because I was so ecstatic at how well I was doing. That's when I blew an account. It had nothing to do with being fearful. When I was fearful, I was, if anything, taking smaller profits, cutting trades short, doing myself a disservice that way, making it incredibly much hard on myself, much harder on myself than it needed to be. So anyways, let's go ahead and get into here. As you can see, we've got this calendar up here. The upcoming week, last week was interesting. We had CPI, PPI, right? And while the numbers didn't necessarily come in bad, depending on the analyst you looked at, they're going to say, oh, well, CPI came in good, but it's not really what it says it is. And then PPI came in looking terrible, especially right at the get-go, and yet the market was resilient. So we've got a lot of mixed signals, and again, I think a lot of that volatility has to do with trade wars, with other wars, has to do with trade negotiations, right? And we are just barely getting things established under this administration. So for this upcoming week, we have three calendar days with market mover events, okay, for the U.S. That's what I'm concerned with, because that's when I get in and look at pre-market and see how it's gonna act based on these. So the first one is on Tuesday. Tuesday we have housing starts and permits. We're looking for a little bit of a drawback there, as you can see. Wednesday. Oh, also keeping in mind the time. So 7:30 Central Time, right? Here we got 9:30 Central Time and 1 p.m. Central Time. Petroleum and FOMC minutes. Watch this one at FOMC minutes. Even though we already know what was said, there's some, not so much revisions as some clarifications that usually come out in the minutes, and people look for key language moving forward, of course. And then Thursday jobless claims as always, and then we also have existing home sales. 7:30, 9 o'clock, all these are in Central Time, so whatever time zone you are in, please take that into account. Let's go to the sector PDFs. Look at last week. How did last week go? Not too bad. We saw a few more red spots than we saw the week prior, and when we get to the charts, that'll make sense. Consumer staples, industrials, technology, utilities, but nothing horrendous, right? It's like, okay, slight pullback. Nothing horrendous, and that's for the entire week. For one day, a very mixed bag. I can't go to the day prior, but it's a mixed bag. I mean, red, green, nothing. Red, green, red, nothing. Green, red, yeah. So very mixed bag, highs and lows. Only two with some significant, I mean, greater than 1%. We're going to call that significant. Healthcare was up 1.5%, and then financials down 1%. But everything else still fairly decent. Technology come close. Okay, that's 0.76 down. That's almost 1%. So that's a pretty good hit. But the rest, yeah, still within 0.5%. Not terrible, not great, not terrible. But again, we're going to go to the charts. We're going to take a look at that. Here's the remaining earning reports for next week that are coming out. I'm not looking at any particular names on here that I'm interested in, but then again, my trading is, as you may have figured out by now, completely based on the market. My long-term investing, still not interested in any of these names. Yeah, not one of them. Okay, that's enough time. I'm going to get off of that. Let's go to the charts. That's not what I want. That's what I want. Okay. And let's go ahead and start over with RTY. And by the way, I haven't looked at these yet. So when I look at these, you're looking at them with me live. This is, you see them as I see them, right? So I still think that when it comes down to it, we could probably move this liquidity box that we've got here and say, okay, if we break below this level, get below here, right down in here is your liquidity. And we can put this line below that level. First area of liquidity here, second right back where we had liquidity before. Okay, pretty simple. And all I mean by that is if price drops, it's going to look to take out stops, right? That's what I mean by liquidity. There's a bunch of orders out here that are unfilled, that all these people that bought placed their stops, and they're down here somewhere. Some are here, some are here, some are here, but you go to the lowest one in this grouping, lowest ones that we got to match here, and a lot of people that place their stuff here are going to place their stops below these two lowest ones. So yes, below here is a lot of liquidity, and the reason I say here and not way down here is because you had all these buyers come in and soak up this selling to this point, and then it moves sideways. Okay, so these fresh buyers, here's where their stops are. Anybody that is a buyer from this candle, yeah, their stop's down here. And some of these folks that bought up to this level, maybe they held on, although this is a pretty good liquidity run. Some of these people that bought here, right, maybe they've moved their stops up. But basically anything at this line or above before it, this is where you could see some stops still be taken out from all these buyers, because they put their stuff in and who knows where they place their stops, only that they're going to be lower than here. This group at the bottom of, let's move this line probably to right here. This group, maybe down to as far as here, this run on that liquidity took out anything in this level. But it stopped at this level, which means all these people, and potentially some of these people, have their stops in this area here and moving down. So just a thought on that. This is RTY, right? The Russell, forgive me, lingering cough. Russell 2000 small cap stocks. So to the upside, we've still got the exact same high. Was set Friday, Thursday, Wednesday, Tuesday, Monday. So Monday really, well, Monday was sided. Tuesday really took off. Wednesday really took off, and we saw that across the board. And the last 2 days spent pulling back and kind of got held up at this top level, which is interesting. I was curious to see if we were going to have buyers step back in, and why would I look for buyers there if I'm looking for liquidity levels? Well, when you break past like this did a liquidity run, you're going to have people step in and buy at that point. Well, they got held up, and this broke this level here up to this top, which means we could have had sellers come in and defend this level, but we didn't. We had enough buyers to push up above it and start closing above it, which means all these buyers are likely going to defend this level whether they've got stops down here or not. This is where they came in, and this is the level they had to break through and soak up all these sellers, okay, again, into liquidity, which is why it's important. It could have been a quick run like this, drop down, pop back up and move up. We could still see it break down, but that's why I'm watching this level. So we broke down twice and we wicked it, right? So here's the candle body right at the top of this level is where we dropped below it, but then it came back up, and this level was defended by the buyers that had come into the market. Do they continue, or do those buyers get soaked up and then we drop to a lower level? We'll see. We'll see. We don't have that answer right now, but I am watching that level. So if we were to place another line, and when I say I'm watching, it just means we're looking at after the fact, because I don't trade this market. I don't really focus on it very heavily. But let's put it there and let's see what happens. All right, let's go to the YM. Again, another one that I don't personally trade. I tend to watch a little bit closer. We can get rid of that for now. We don't need that. Liquidity, hey, right about the same area where we were. I'm going to go with the common bottom there, which down here would probably be appropriate as well. But almost the exact same picture, right? Larger swings, but still the same sideways movement after a nice pop back up to the upside, because we had buyers come in and defend what appears to be this area here, which to me looks extremely bullish. I mean, if they didn't come down to this level, which was a lot more popular price level, you saw these buyers come back in, so they would have been placing stops in this area, and we defended at around these levels. Okay, so the buying was strong up here. We got a lot of oscillation, just hit a new all-time high, but we'll see what happens moving forward. However, so Friday, Thursday, Wednesday, Tuesday, Monday, same Tuesday, Wednesday, right? And then Thursday we ended up with an upwards candle, nice pullback upwards candle, and popped up into a high. The sellers at this point did come in and defend, and we have no structure above. So what do we do with that? Don't know yet, but what we do know is this is where our new sellers are probably placing their stops. Do they come in and drop it back down to this level? I can see that happening. If they do, liquidity run would be in here, same as RTY, based on structure, not on price, obviously. and then below that down into the very popular price point that was high lit before. Below that area, all liquidity runs. And we'll see what happens at those points. Alright, let's go over to ES, which I'm far more interested in. I am kind of trading with a friend on this, and by that I don't mean I'm making trades in the ES. I'm not, but I do go ahead and follow her trades when I can, and she follows mine, and we kind of help walk each other, talk each other through some of the trades to just bounce ideas off of. Think very much alike, something I'm very grateful for. Has been helpful for me, and I like to think, and I'm hopeful also helpful for her as well. So this picture is slightly different, right? We didn't have an exact sideways move. We did have, during that sideways move in the multiple days, we actually had a stair step up. So we popped back up, moved sideways for a couple days, let's call it 3 days, and then stair step up, and we got a consolidation of prices in here, even if you go to the wick there, sideways, and then popped above it. Well, popping above it ended up putting us in a small 3-day move. Now this is interesting because this wasn't as big a move on Tuesday and Wednesday, was it? Not as in the other ones. However, we're also fighting with all-time highs again, no structure above. So even buyers at this point are like, do we go up here? Do we go up here? And knowing what we know about the markets, overvalued, things are a little weird, long, sharp uptrend. What do we do here? And I think that that's what we're faced with here. I do believe we look fairly bullish. If we break below this level, there's liquidity down to here. We break below this level, there's some liquidity down to here. Break below this, we're looking at the same thing as the other two. And we can make that look a little bigger for the sake of visualization, right? So liquidity all in here, but if you look at that, that really is only, that's 13 down to, how big is that? Oof, excuse me. Okay, that's pretty good. So you got 63 points. That's a lot of area to have some liquidity. Something to think about moving down. So watch for this area breaking down 64, 52, 22, just below this recent minor but apparently important bit of structure. Back into prior structure, back into prior structure, heavier liquidity, heavier points of liquidity below there. Because not only do you have liquidity here, but also like you did on the RTY, you can see it matches up pretty well with this piece of structure. So if we drop below, we've got all this mess before we get back into any kind of semblance of structure. So a lot of price movement can happen there. All right, let's go to the NQ, the one I'm trading pretty heavily. And again, I'll tell you right off the bat, I see this as hesitant, not bullish, not bearish. I see it as hesitant, and I'll tell you why. So you saw all-time highs again, right? Here, the Tuesday, Wednesday. Popped up and actually I did red, the only one that's that ugly for these, but still up, red but up. So technically it's green, even though we closed lower than we opened. Now here we have structures a little different because this is more of a trend moving up. So the only real structure you have here are these three that are stopping at this level. Let me put this right here. See what I mean? Okay, so this bit of structure you have. Now is it just a minor pullback and then a move up? It could definitely be. As these are Keltner channels and this is a 3 ATR, we're looking at, if we divide this into two even sections, right now we're sitting at about the 1 ATR. So we're not incredibly outside of the ability to move higher with ease. 1 ATR is just standard movement, and we're still within that on the average, or against, relative to, that's a better way to put it, relative to the average. So that's the structure that I would see there. If we broke that, the rest of this is more of a trend than it is, you could say this is moving sideways, but there's only a couple candles. I see that as more of a trend, which means the bulk of liquidity I see is really going to be down here. So that's a lot farther to drop. That's what? That's almost 23,800, and down here it's almost 800 points drop. Now, ATR on this is about 300 points a day, so we can definitely see it. If we're going to get held up anywhere in the meantime, calling it structure, I think the only place we really see that is at these two candles below. So we could definitely see that, and that's only going to be, what is that, 220-ish points below. That could happen in a day, and we could see if it bounces there. So it could be a very significant level. I just don't think it's the strongest level. I think it's an important level, but it's only got a 2 days of actual support and then some common price action based on the prior 2 days, but nothing consistent. I mean, closed decently below it, and then we passed it and popped right up to the top of it, which this was held. So we'll see how this plays out. There's no actual fair value gaps really. I mean, you got a little bitty one right in here, maybe how many points is that? 05, 50. So you get about a 50 point fair value gap in here, but it's dinky. Could pass over real quick. Nothing in here, you know. If anything, this is the only place we've got some sort of inefficiency in our price action. It's right here, that little guy. And we could see it. Maybe it pulls back down to the inefficiency and pops back up. It is in line with the average, so it's a good look as it sits right now. Now this is a daily chart, so things look a little different. If I put it on a 1 minute chart, we can see what the day looked like. Yeah, let it finish freaking out there for a second. And then you go to futures, take out the extended because I do not trade. Looks the extended on there. And as you can see, these moves during the days, you can catch some decent action. It's not saying you can't, because you see that we get the nice consolidated points and then it reacts off of, but it goes only so far. So Friday when we opened, I sat through this mess, made a trade here, caught a good number of points, doubled my daily goal, so then I was done. I was good. But what did it do? It dropped down. We just set this line here, so I'm not going to count that, but it did drop down. Found itself a nice little floor, which is based off, or could be possibly based off another area that I'm not going to go into as part of a trade setup, and that's all we're here to talk about right now. You know, pop back up. Where did it go to? Prior area of mess, also where the open. I believe this was the open on the day. But then we started to break down, and sure enough, once we got out of this area, you see the bottoms here, it dropped lower. Now this didn't drop low enough to where that would have been good for trade, maybe a few points. Not something I'm interested in. So nothing's major movement. Consolidation, stair step down, consolidation. This was a nice run up at that point. But look at the amount of wicks until you got to this point. These would have been really sketchy. I don't know if I'd be wanting to trade on that. And then we went right into a doji. Doesn't make me comfortable. If anything, a breakout on here, but you would have had to been in there. You could have ridden it up, and if you thought it was going to keep going, it would have been pulled back on you easy. You'd have lost profits. So a very challenging day. I think this is definitely one. In the times I would have been trading, it was more to the downside. I caught the good movement that I saw. If anything, based off this double bottom playing back to the top side after it broke here and broke here, could have considered getting in and popped up. You could have put a buy order here. You would have picked it up on the next pullback, right? And then sure, it shot up. So that could have been a good trade. But the rest of this, I don't like any of it. I don't like any of it, and I don't even play this time of day, so I don't care. My time to play, just so you know. Let me see if I can add a decent little drawing here. Okay, so my time to play, time-wise, is about 9:45, sometimes 9:30. Sometimes I hit the actual open, depends on what I see. All the way to, where's it at? Oh, hour and a half. That's when I play, and this is based on oh, sorry. Sorry, this one is actually, I trade on NinjaTrader. It's set to my thing. So there you go. Hour and a half. This is all the time period that I trade in a day. So none of this even matters to me. I just don't care. So in this area, I see two good trades. The one I took, and I think this would have been a nice follow-up. And believe me, I was considering another trade, but then I got to thinking to myself as I'm looking at the probabilities. It's like I've already made double my goal on the day in terms of points. Why am I going to put that at risk on a Friday, no less? When you could, it's very easy, especially psychologically, to turn a green day into a red day, and then enter into the weekend in a rough spot. Why am I going to do that to myself? So I didn't take it. I don't even think I saw it. I think I walked away by that time, and I was done. Pretty sure that's what happened. But either way, I didn't put too much thought into it after I made my first trade, and then thought about that piece of advice to myself. Yeah, don't waste a day. So, anyways, that was my day, and here's how I look at the charts. And I am trading this. People use 1 minute, 5 minute, 15 minute. They've got 3 different charts up. People use 5 minute charts. People have hours, their highest time frame, to give them a reference, and I understand the purpose behind that. I mean, I really do. I've done it myself before in the past, but I've done my best to cut out all the clutter. And what you begin to see, especially if you keep track of when it opens, like, look, there's 5 minutes. What happened in 5 minutes? We dropped down, and then the bottom of the candle for the 5 minute candle basically fluctuated around, came back up halfway, and then closed near-ish at the bottom of the 5 minute candle. That's what happened. And you can see that. You don't need to see one candle doing that. I can see it on 5 candles that are doing that. Next 5 minute candle basically probably looked like a doji, most likely, because we would have gone from about here to here. So we open here, close here. It would have been slightly red. And then you just had red candles after that for a little while. So if you can learn to see the charts in terms of different time frames as you're looking at it, you can go to smaller time frames and you can have less clutter by not needing as many charts up. But that's going to take you time. And not everybody does that. People get comfortable with what they do. I've become used to and comfortable with this. It works for me. The one thing about trading that I would say is overarching to everything else is the fact that it is very, very personal. So anything anybody shows you, it all works and it all fails. The thing is that if they're the ones showing it to you and they're convinced of their ideas, it's because it works for them that way. Well, you're not them. Take the pieces that are valuable, back test them, develop your own system. If that's bits and pieces from everybody else, like you're pulling off a buffet menu, great, no problem with that. But it's still, the end product has to be yours, has to be what you're going to use, you're going to find the most comfortable with. So please make your system, make your process very personal to yourself, because it's going to end up being if you stick around long enough. All right, well, with that, I've jibber-jabbered on enough. I will let y'all be, and you have a fantastic weekend.